Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. I'm your host, Dylan Silver, and today on the show we have Robert Fragoso from beautiful Orange County, California, who is a full cycle real estate investor, has been involved in the hard money side, and is now focused primarily on fix and flips. Robert, welcome to the show.
Hey, thank you for having me. I appreciate it, Dylan.
Absolutely. You know, before we hopped on here, we were musing about tornadoes in Denton, which I'm grateful I don't have to be a part of, forever indefinitely. But you are in Orange County and you have ties to DFW, but you've really done real estate in many different areas. How did you originally get into the real estate space?
So, it's a funny story in that I was a senior in high school, and what happened was I was just sitting at the mall, kind of people watching with a friend of mine, one of my best friends, and this guy next to me sitting at a Burger King, just watching people walk by the mall, right? And one of the flyers that he had said, "Buy real estate for no money down." And so I made a joke. I'm like, hey, because I'm a high school kid, I'm a little bit of a smart ass, and I just said, I'm like, hey, well, I have no money, sell me a house, right? And we laugh. And he laughs and he's like, it's actually easier to like buy a house than a car right now. And this was back in 1989. And he was stone cold serious. I had just bought a car. So I know I had to like to save up, and my parents helped me buy a car and all this, and so I knew how tough that was, right? And so I listened to him. He told me what he did. He was basically turned out to be like one of these guys that was a guru teaching retired folks how to invest their retirement for extra income, and how to, and buying houses with no money down kind of helped that, right? And so he's like, come on down to the seminar. So what I didn't notice about the flyer was at the bottom, this is back in 89, it was $2,995 to go to a seminar.
Mm.
And I remember, and I remember I had just paid $3,200 for my car, right? So I'm like, well, I can tell you right now, I'm not going to pay that. And he's like, well, listen, help me set up, show up at like 6 a.m. Saturday morning, and I'll let you stay, and you can learn everything for free. So I said, all right.
That's a
So
deal.
I showed up, so I showed up early and helped him set up and do all this stuff. And he had a bunch of people there, and everybody's kind of getting into it, right, and understanding. But I kind of got the understanding of it. And back then, what they were doing, they were buying houses subject to, which meant that they were leaving the existing mortgage on. People were either wrapping the mortgage or they were getting that. It was during the for many of you guys who saw the Great Recession here in 2005, back in 1990, they had another recession that was also banking related, which was the savings and loan crisis.
Mhm.
So all these SNLs that went under, that were funding all the commercial, kind of were having issues. So it created a turmoil in that financing side. So that's why the subject to financing became very attractive. So he showed me how to do different things, door knock, find houses. Essentially became a wholesaler for him. Um,
Mm.
I didn't know that they didn't call it wholesaling back then, but I was just finding houses for him. Then I asked him if I could be part of one of the flips and help him fix it up and do all that stuff. And he let me participate in the profit. And then from there, just kind of grew. I ended up figuring out that he wasn't paying me enough for the houses that I was bringing. And it was his own fault, actually. I would have never figured it out except he was bragging one day. And I figured it out, and so I
Build the
decided to
beans.
meet more investors. Yeah, and then expanded my reach, started networking, and eventually started putting a syndicate together for buying apartment buildings after the savings and loans crashed, because we figured out we could buy these buildings for less than what they could be built for.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
But at that time, California had a like net negative migration for people that were moving into the state. So the vacancy rate was very high, and managing those buildings was a challenge. We bought, I think, we had about 103 doors or something like that, 100, right around 100 doors. And you're young, kind of trying to manage all this stuff. You're making a little bit of money through the cash flow. We did have all the buildings free and clear because we had investors. So, the cash flow was basically paying interest, and we were getting some of our percentage of profit from it. Ended up selling some of those buildings, and we were flipping apart buildings essentially because we would stabilize them and then sell them. In hindsight, should have kept all of those, right?
Yeah.
But I mean, at the time, you're making $2,000 or $3,000 a month, or you can make 300,000 at one lump sum. It's like, well, that's 100 months worth of income. We can
Yes.
we can do better, right? Yeah. So you take the bigger money. So anyhow, so I fast forward, economy changed. A lot of our investors were already investing with us. At the time, we'd be referring a lot of the property that we were wholesaling to a hard money lender who it's getting tougher and tougher to find these deals. And he brags again one day, he just brags, and he's like, man, you guys made me $100,000 last month. And we looked at each other and we're like, we're in the wrong business, right? So started getting the investors together. They weren't getting enough syndication deals from us because the deals were tougher to find as the market got better and financing had kind of stabilized a little bit more. So I met some other investors who had more money than loans, and we started lending to investors who would buy fix and flip, and we started a company called Anchor Loans that is nationally now one of the largest companies in the country. We sold that to a hedge fund and exited that I don't know, 10 years ago now, I think. You have to look at the actual dates, but um, semi-retire because you have a non-compete for a while, and then you get back into the business, which is where I'm at now. But now I'm basically doing fix and flips, some development projects that are new construction. We've got a few of those going, whether it's an ADU or a house. And then I'm coaching, people who want to get into the business, because that's kind of the way I learned, was through just doing. And I had a mentor who was a real estate investor, and that's, I think, the best way to learn is just to get out there and start doing it. And so we're very action based, and that's kind of what we promote. So
Yeah.
I don't want you sitting just watching videos, because that's great for a little bit, but you got to do it. It's much
It's
easier
a
than you think it is.
contact sport. It is a contact sport.
Yeah, yeah,
And
for sure.
what you said, Robert, at the top about going from wholesaling to, if I heard you correctly, commercial uh, real estate syndicate is
Right.
very unique. I think most people do not graduate immediately from wholesaling to commercial real estate syndicates. But you've basically done everything at this point.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, I love. I mean, listen, I had my contractor's license in DFW, had my contractor's license here in California because I wanted to understand what I was getting charged for and understand that business while you're doing the fix and flips, and it's a great experience. I figured out very quickly I never wanted to fix other people's homes, and dealing with consumers was just a giant pain in the butt, so
Yeah.
couldn't do that. But from the syndicate side, I will say this: it's just the opportunity that presented itself, right? And so just capturing. So what happened was we were wholesaling these houses, right? We were fixing and flipping some, and then the market had changed where we're buying these houses, you're making a little bit of money here and there, and somebody approaches you about an apartment building, and not knowing enough that there wasn't enough financing or you couldn't get financing for it. And back then the prices for these apartment buildings were really cheap, so it wasn't like you had to put together a lot of money. So my partner at the time, his family were the largest ARCO dealers in the Western U.S. He had ties, and their family had a lot of money, but their friends and family also had money, and so we went out to, we actually spent the money to go out and put together a syndication. And in going out and raising money, the first investor we met with, he's like, "Sounds like a good deal. I'll just fund the whole thing." So it wasn't very much of a syndication because the first guy recognized the opportunity, said it was really good, and he's like, "I'll take it all." It's like, okay. So, that was our first syndication deal. Was like, we're like, this is really easy to do. So,
How old are you at this time?
23, I'm gonna say
Okay, so
23,
you're
something like that.
23. You're manning the front for a commercial real estate
24, yeah.
syndicate. Lots of responsibility, lots of money exchanging hands here. What was your feeling at the time? Were you like, "Wow, we're doing this,"
So,
or
so,
was it?
but Dylan, it wasn't even that much money. I mean, we bought the first 16 unit building for
Uh-huh.
$225,000. It
No
was
kidding.
nothing. Yeah, it was in Long Beach, California. It was all two bedrooms, 3-story, 1972 building. I still remember the address. You can look it up. It's 1720 Chestnut in Long Beach.
How did you get a deal
93
like
or something.
that?
They were all like that. It was during the time where like you have 15% like net negative migration. There was like basically trauma in the street because the SNLs had just crashed, and that's who was financing all these commercial deals. So you
Yeah.
couldn't get financing for it. And then you at the same time you had all of the base closures in California, right? You were
Yep.
in a recession, right? 1990 was a recession. Values were dropping. They couldn't get financing. And so what happened was these buildings were basically being either foreclosed on by the banks, right, that had gone under. And then they were just trying because the banks had gone under, the FDIC and the people they were insuring the losses that were happening. And so you could buy these buildings for almost nothing, like whatever you made the offer. In fact, here our rule at the time was we would pay no more than 3 times gross. That was the max, and we're trying to get them for 2 times the gross multiplier of the year, which gave you a cap rate of like 14 or 16, percent, right?
Yeah. Money in the
So
bank.
these things, I mean, just think that this was a 16,000 square foot building that was 3 stories with an elevator. You can't build that for
Crazy.
225 even back then,
Yeah, that's
right? And so we're
absurd. Yeah.
like, okay, in order for our investors to make money, we need to rent out like half of the building,
Yeah.
right? So the vacancy rate was 15%. So we figured out it's like, okay, we can be at that 15% vacancy rate and be making more money than we need to make, and our investors will be happy. And so that's kind of the opportunity that we realized. So we had to spend some money fixing up the building. We fixed it up, rented it out, or rented some units out. We figured out that when there's a 15% vacancy, nobody's moving and nobody really wants to rent your. So after sitting there and the tenants you get, you're competing against people that are like, no deposit, first month free, last month free. So basically, you're paying for 10 months out of 12 out of the year,
Yeah.
right? And then the people that come, we end up naming them jumpers, right? So what happened is that they'll come, they've got good credit, there's no deposit, they just move in. The first month is free, the second month they don't pay. But before
Wow.
you evict them, they leave, right? And so they leave so that you're not going to spend the money to go after them once they're gone, right? Because
Huh. Get new
you have
tenants.
a vacant building and you're trying to just fill it up. So
Yeah.
that's bad money after. So their credit doesn't get affected, and they keep doing this month after month. So we figured out it's like, okay, all these jumpers have something in common. They don't have a lot of furniture. Um, they sit there and they've got like a lawn chair, a TV, and a cooler. Maybe they got a couch or something like that. But they're very like they have to be able to move very quickly, right?
Yeah.
And so what we decided to do was hire some door knockers. and go and door knock the neighborhood for families who are living in units that maybe haven't been well taken care of, or the landlord hasn't upgraded them, which nobody had because the market was down, right? We're like, look, our units have new appliances, new carpet, new paint.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
You'll get no deposit. First month is free, and we'll rent you a truck, right? And so our guys were trained to basically find out and peek in their units. If they look like they've lived there for, how long have you lived here? 5 years? Great, you qualify, right? Oh, 3 months? Oh, fantastic. Here's the application. It's a $50 charge, and then nobody would apply, right? So they
Wow.
would, and so basically we went around and we got the other building's best long-term tenants and moved them into our building. And that's how we ended up filling up the buildings. And we told the brokers about this, and they're like, it's a genius idea. That's a great
Genius.
way when nobody can get it. And so, it's funny because I'd read a book called Guerrilla Marketing,
I love
and
that.
that's the book that gave me this idea to okay, if when things aren't working, what are you going to do differently? And we're like, all right, this is what we need. We need to find these tenants. How do we get directly to them? And so that program worked
The
really
doors.
well. And so our investors were putting out more money to buy more buildings. We were buying. I mean, we bought a 9-unit building for 104,000 on Magnolia. We basically were buying everything in this little area that was kind of the hood of Long Beach called Wrigley,
Uh-huh.
and we were buying a lot of buildings in that area. We can get things really cheap. Long Beach was very undervalued. Aerospace had moved out, so there was even a larger vacancy rate there, so you can buy these buildings for nothing. And then we started, we were kind of managing them. At the time, I'm living on the beach in Newport, and we're like, man, this is a pain in the butt. You got to go all the way to Long Beach every so often. When you're 24 at this point, probably, you just don't want to leave because you live in a beautiful spot, and you get a little lazy, and we figure out we could sell this building that we paid 225 for. We put like 80,000 into fixing it up, and somebody offered us 680, and we're like, oh, we got to take that. Right, so
Yeah.
we sold it. No, the building was cash flowing, it was doing great, but we took the short money, and our investors got a lot of that money, we got our portion, and so it turned out well. And then we started doing this. We sold that 9-unit building that I mentioned that was on Magnolia. We thought we maxed out its value. We sold it for, I don't remember, let's see, we bought it for 100 and something. We probably sold it for 3 something.
Mm.
This guy turned around. We had just remodeled it, by the way.
Yeah.
This guy turned around, and then got rid of some of the kitchens, combined some of the units, sold it as a 4-unit for twice as much as we had sold it to him for.
What in the
We're like, how do you
world?
take 9 units? You take 9 units that has more income, right? You shrink it down to 4 units, and he sells it for more. And we're like baffled. And we're like,
Wow.
how did he do that? How did he do
Yeah.
that? And
Yeah.
so what he figured out was this: is that you can't do this right now, right? Because there's a moratorium on doing it because there's a shortage of housing,
Uh-huh.
right? But back then, what happened was this: was we figured out that the reason he did that is because there's still no financing, or it's very tough to get financing for apartment buildings. You had to have 30% down. But if you shrunk it down to 4 units, you can get FHA financing for 3% down.
Mm.
And so they could pay more, right?
Without
Leverage it
coming out
for
of
more.
pocket. Yeah.
Yeah, leverage it for more, live in 1 unit for free, and rent out the other 3. And the people that were buying these early on were basically, it's like a house hack. They would rent out the other 3 and live for free. And so
Wow.
people started doing this, and they pay twice as much as we could sell the units for. So we're like, oh, we're idiots. This guy's a genius, right? And so we had other buildings that were 6 units. We're like, convert it down to 4 and do that. And so that was kind of the goal that we were doing. And so that turned out well. And then that market, of course, the market. Here's the thing about real estate, right? It's a cycle, and you have to figure out. There's this like window of opportunity that gets created, and every window has a timeline on it. And your job as this real estate investor is to then figure this out, go out, maximize that opportunity as much as you can during that time, And then once it starts to close, look for the other thing. Every time there's a turmoil in the marketplace, financing gets tougher, something changes, a rule changes, it means it's created an opportunity somewhere else. And if you're looking for it, sometimes you can find it and then really, really capture or even build a business around it.
Robert, you seem to have this incredible agility and ability to seize opportunity, which I tend to think is a hallmark of a real estate entrepreneur, right? So you have to be able to adapt with changing conditions. And
Right.
going from wholesaling to then this commercial real estate syndicate to then seeing that you could take out FHA loans, you're seeing, okay, there's an opportunity here. Let me seize on this. And are you aware at this point in time that you're uniquely skilled in this regard and that this is really propelling you towards success?
Yeah, yeah, absolutely not. I had no idea because you're so young, and you're focused on the weekends more so than like the business. But it is you're having a lot of fun because you're making some money, and what you think is a lot of money until you really get into scaling. And it really wasn't. We didn't scale until we started Anchor, and that was more of a loan hard money company. What most people didn't realize is that while most people recognize Anchor Loans as a hard money company, they didn't realize that we were also an equity company. And so we were doing about the equal amounts of, buying, be it at trustee sale, because, here's another opportunity that arose, right? Post 2008, right? The market crashed. You have a solid year that's a, horrible year. And then the second year, 2009, opportunities start to rise, right? So there's a saying when the market's falling and is crashing, right? That you can't catch a falling knife. You got to let it drop first. And so you're trying to sit tight and just survive that rough year, right? Before you can spot the opportunities. And that's what happens, right? And so then all of a sudden you realize, okay, the dust is settling. All these banks went out of business, right? Or they need money or they're getting ready to go out of business, right?
Yep.
And so they start discounting properties in bulk. So usually these bulk deals aren't going to trickle down to consumers like us, right? They're going
Yeah.
to go to the big hedge funds. They're going to go to at the time the Lehman Brothers and the Goldman Sachs and these guys. They're going to get the deals, right? Intrabank deals that come from bank to bank. Um, if we're getting them, they're in trouble, right? We started noticing Washington Mutual start to build like new banks everywhere, and
Hmm.
we're like, that's a bad sign, right? So when you see banks like really starting to open up new locations like crazy, usually it's that they're seeking capital, right? So for every branch that they build, they get new deposits. And so when you're desperate for deposits, you build more branches. And we figured this out, right? And so we're like, Washington Mutual, they got problems. Of course, they were the first bank to go under, right? And so you start to notice this trend, and you see these other banks that they start to do that, or they start to like offer unreasonable discounts because they're seeking deposits, right? Hey, if you bring your deposits, we'll give you a higher yield or whatever it is. They're
Mm.
seeking deposits, right?
Yeah.
And so when you're in a time during turmoil that's happening, you know that this is happening, right? And you see the writing on the wall, um, you start to see, okay, what's the opportunity? Well, when the dust started to settle, you start to see that, okay, we can buy these buildings. They need capital. The capital they need supersedes the amount of losses that they can take because those losses won't get reported till, like let's say they get reported, they're not going to get really seen for 30 days. So if they can raise enough capital during that time, then all of a sudden they're kind of they're prolonging essentially in some cases the inevitable. And so we would do that. We had a relationship with someone at GMAC who also went under, and you're sitting there and you're looking at the opportunities that they're giving you, and you're like, look, I can pay more for some of these houses if you guys just give us, like take your time. And they're like, and I remember the guy telling me, he's like, I'm being told sell the houses for get as much as you can as fast as you can, and the
Hmm.
emphasis is as fast as you can. And he's like, he's literally telling me, he goes, look, just make money on our mistakes. We're comfortable with where we're at. And we're like, okay, let's go. Right? And so,
Wow.
so we bought
Wow.
two, I think two bulk purchases from them. And what happens with these bulk purchases, they don't happen like normally. But what happens is that, it's kind of a trade, a cash for deed situation. There's no escrow, there's no nothing. You start off with like, let's say the first one, we started off with 36 properties. They're not a huge one. But by the time you close, when you're going to wire, we only closed on like 12 or 14. Some have title issues, others
Yeah.
have others they sell, because as soon as you tell them, yes, we'll pay it, they tell their dispositions department, here's what we're getting. If you can get more, get it. Because they don't have a commitment to sell all of them until we've wired our money. Right.
Yeah.
And so all of a sudden, like the list starts dwindling down, right? Because they can sell, because we've already figured out their mistakes, right? And so they're figuring them out because we've already said yes to these deals. So now it's that kind of cat and mouse game.
Wow.
So the next one we figured out, all right, we have to act quicker, right? And so I tell them, I'm like, look, like, why are you being so, like, you want us to wire? There's no problem. We're going to wire you. I'm like, it's like, yeah. He's like, look, he told me in confidence once. He's like, look, we don't know if we're like, so the FDIC goes, and generally, unless it's like a public like issue, they don't usually take over banks on Mondays, Tuesdays, Wednesdays, or Thursdays. It's always a Friday. And reason they do it on Fridays is that they can shut it down Friday, right? Close the doors. It's closed Saturday and Sunday, and usually by Sunday they've already got another bank willing to take over that bank, and so
Mm.
the people then have access to their deposit on Monday.
Yeah.
So it doesn't create a bank run. Whereas if they do it on Tuesday, all the banks are open, right? And so it creates a bank run.
You don't
And
want that.
so they figured out, okay, take over banks on Fridays. So I remember him telling me, he's like, look, I don't know if we're going to be open Friday. Like, we need deposits. Like, we need your money. Like, blah, blah, blah. Get it in here. And so all this stuff. So the second one, I remember I was in Dallas,
Yeah.
and their office was in Dallas. And we go, and I tell him, I'm like, hey, okay, we're wiring you today. And I'm sitting in his office. I'm like, I need the deeds. And this is a Wednesday. And he's laughing at me. He's like, why are you here? I'm like, well, I need to take the deeds because we wired you the
Yeah.
money. He's like, what, you think we're not good for it? I'm like, you literally told me you might not be around Friday. So I need the deeds. He
Yeah.
laughs and he's like, you know what? You're right. he's like, just stick around. We'll get all the deeds, grant deed, because they hadn't even drawn them yet. And they were already telling us to wire. So we had to wire them their money. We're waiting for the deeds. So I just
Deeds.
waited there. I was there. Yeah, the grant,
Yeah.
well, and grant deeds and warranty deeds, depending on where the properties were.
Right.
And so, I wait. I'm there for hours, and we go out to lunch. We come back. The deeds are ready. I'm like, all right, I'll see you later. And I literally take possession. I walk them over to the title company. They go, and then they record them the next day, and that's it. And
Wow.
so, but it was a weird time. And I remember we had another bulk that we were buying from them, and then I remember Bush going on to the TV and saying he's going to bail out AEG and bail out the banks and do all that stuff. And then they canceled that sale because they no longer needed our money. They were going to get bailed out. So they survived,
Crazy.
during that time.
So Robert,
Ultimately, I think they went on.
as you're seeing all of this, and I'm hearing you talk, it's your passion is apparent just through the screen here. I still hear, and correct me if I'm wrong, I still hear a type of problem solving that I feel like I got on a much smaller level and still am as a wholesaler. Because you're thinking about these different ways to piece a deal together creatively, identifying trends, and then where other people might not see real urgency, you're seeing urgency, or where other people might be maybe not seeing any change, you're seeing this change and this opportunity. Did you feel that way? Did you feel like at heart there was still a wholesaler within you?
It's funny because I never thought of myself as a wholesaler until
Okay.
like years later when it became in vogue, right? I mean, it really
Yeah.
wasn't the trend. The trend was always to become the investor, right? It's because they were making most of the money. And it's shifted a little bit to where, some of the wholesalers that are out there, right? They take a little bit of advantage. It's a little bit of it's become, unfortunate, a little bit of a soft con,
Yeah.
right? Where they inflate the ARV, they deflate the repairs, and then they're trying to make the spread, right? And so, in many cases, like I work with a lot of great wholesalers that bring me deals, and it's great, right? And so, but most of them are very transparent. It's one thing that I kind of demand of the people that I work with is I want transparency because oftentimes, we've spotted a lot of fraud that happens, right? And through no fault of the wholesaler, but they get brought a deal and they're trying, it's such a good deal that when all of a sudden you see this opportunity that you're going to make so much money, you overlook some obvious signs, right?
Yep.
And so I require kind of transparency. I don't really care how much somebody's making, right? If it's a good deal for me, it's a good deal for me. I'm happy with that. I'll
Yeah.
play ball with that. In fact, I mean, I had a deal that I passed on. Actually, I shouldn't say I didn't pass on it. I tried negotiating it and it went to the next guy, and it was a good deal where I got it, but the wholesaler was making $1 million.
What?
Yeah. And I'm
Oh
like,
my
hey,
God.
wait. And I'm like, he's going to be happy with 800,000. I'm going to offer him 800,000. Right. It's a good deal at $1 million. And it's not fraud. It's a good deal, but it was for a building in downtown LA. And it was an 8-story building by the Staples Center. It wasn't the Staples Center yet, but you knew it was in the process of being built. You knew this thing was going to be worth like a lot more money. And he's like, I'll call you back. And he didn't call me back. And I'm like, I
Huh.
called him back later that afternoon, by the way, same day. I'm like, hey, what's up? We're going to do this? He's like, no, I sold it already. It's yeah, I'm like, I missed out on that deal over 200,000, right? That probably had a $5 million profit plus on it because I tried to negotiate for 200,000 and this guy, but you talk to the guy and I didn't think he knew what he had, right? So it was just a matter
Yeah.
of like, all right. I mean, it was still an $800,000 payday. I thought that was pretty good. He was going to be
Come
like,
on, an
it's an easy phone
assignment?
call, right?
That's
Yeah.
incredible.
So he did really well. So if you're assigning deals, right, commercials better, but I will tell you those guys are sharks, right? I
Yeah.
mean, if you're dealing with commercial, they will try to go around you if they can. 100% will, and I don't care what you think you've got signed, they will. They got you. They have so many different entities, so many different ways structures, so many different way. I mean, it's just so anyway. So it's much more difficult to do that, but. I will say with the, again, changes in more efficiency and a lot of people who've come in, there has been a time, and I think that time's kind of coming to an end with wholesaling, um, where it was more lucrative to wholesale in volume than it was to fix and flip. Now
100%.
the deals that I'm doing now, we get from wholesalers and we spot unique opportunities. It's kind of what we look for. I'm much pickier on the deals that I'm doing right now than I used to be. And but they do make a lot more money instead of being I know a lot of guys who do deals for 30, $50,000 and they're fixing and flipping them, and this is a 3, 4, 5, 6 month process. In my mind, that's just not enough money. I mean, we've got deals now that will make 5 to 600,000 on a flip,
Robert,
and
we are
so
we are coming up on time here.
sure.
We could probably spend a whole other episode talking about fixing and flipping and the ins and outs of commercial wholesale deals. But where can folks go to get a hold of you?
Sure. So, I mean, on Instagram, it's my full name. It's Robert underscore Fragoso, Fragoso underscore JR for junior. Or you can, either email or I guess call me at 949-572-4468. It's probably the two best ways to reach me.
If someone's got a deal, where are you buying in?
So I'm buying, so I buy local now. I'm not buying in multiple states. It's all Southern California, LA and Orange County. That's really the two markets that I work in. I do have clients that buy in other areas, so if you got other stuff, I'm happy to talk to you. I still do loans. I act more like a private investor and some of our old investors, so we still do hard money loans. In a lot of states, I won't say all the states, but some of the major states that are active, we're active in as well.
Hey, folks, if you're in Orange County area and you've got a deal, reach out to Robert. Robert, thank you so much for your time today.
You got it. Hey, thanks for having me. It's great meeting you.
Absolutely.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.